Welcome to the Elite Money Market Update. I'm your host, Kristen Oakley, and I'm joined today by CEO of Elite Retirement Group, Patrick Barcel. Patrick, it's so exciting to be here with you. How are you today?
Fantastic. I couldn't be happier to be here with you.
Well, great. Well, I know that we have a big show for our viewers at home today. We are going to be talking all about taxes, and it's interesting because I think folks are very much accustomed to the tax preparation, right? A lot of people are preparing their taxes right now. But we are going to be talking more specifically about tax planning. So why is it that we're hearing so much more about taxes these days as it relates to retirement planning?
Well, I think one of the big things is that people are starting to realize that not only do you just need your taxes done, but you have to have some sort of game plan of how to handle being able to prepare your taxes now and then be able to take advantages of the tax codes maybe potentially down the road. So we have some really cool things right now that are available to us through the different tax codes, and we know that's there for a limited amount of time, and we just want to help make sure that folks take advantage of those, and you want to, like everybody else, pay the least amount of taxes possible.
For sure. Well, so what's interesting though is with our government being in national debt of over $30 trillion, is it a safe bet to imagine that taxes are only going to continue to go up?
Yeah, actually, when you look historically, we're at one of the lowest times ever in history for taxes. And it's got to go up from here. I mean, I think that when we look at the amount of debt that's out there, we look at the things that contribute to where the money comes from, the wealthy that are going to pay their share, right? But then also it's still going to trickle down to us one way or another. And I think that, you know, there's really no way but up from here. And I think history just tells us that for sure.
Right. As was it Ben Franklin who said there's only two certainties in life? Death and taxes, unfortunately,
exactly,
right?
Exactly, yep.
So with that, what are some of the strategies that you're able to employ for your clients or folks who come in and meet with you and your team in order to set them up for success for tax planning and retirement?
Yeah, actually, one of the things that comes to mind when you talk about that is a couple I met with recently. They came on in and they sat down with us, and you know, they said the person that they were working with told them that you should do a Roth. You know, just like everybody should do a Roth. And I said, well, sometimes, not always. So when I looked over their things and I got an idea of what their income needs would potentially be in retirement, I noticed that I was like, wow, you guys are paying a lot of taxes today, but your income needs are really, really low. So I don't know that it makes a whole lot of sense. So I think first of all, one of the things that we have to do is we have to really look at and evaluate the tax situation you're in today, and then what it might look like in retirement. And for some people, it might be the same or higher. And then that could really help us figure out what do we need to do today, or even when we draw Social Security, for example. So sometimes we want to maybe delay Social Security because we want to draw taxes or draw our income out of our IRAs earlier, right? And then delay that Social Security so that we can use our lower brackets. And that's kind of what we do with our clients is we use our Memories and Milestones roadmap to help them build a plan so they can see today what is an effective way to be able to plan for taxes, whether it's doing maybe more into your IRA or 401k work, or maybe it is the best to take and make some of that IRA money Roth money, but we really don't know until we really have a good plan together. And another thing that we like to use this tool called a tax what if program.
The tax what if program.
Yeah.
Okay.
The tax what if program. What it does is it allows us to be able to take clients' tax information. We put it into the spreadsheet. Now, I like spreadsheets. I'm an Excel guy. I took a couple classes on it. It's a lot of fun for me. Some of my clients really like it too. But what we do is we just boil it down. We say, okay, here's where you're at now with your taxes, and really here's where it could potentially be if we make some adjustments. And we can look at what maybe 2023 taxes may look like if you do a Roth conversion, for example. How much tax will you pay? Another thing we really focus on is your bracket. Are you maximizing your tax bracket? If you're in the 12% federal tax bracket, do you have room left to take and pay some taxes on IRAs today and be able to put those into a tax-free forever place? Which would be really, really important. And I think, you know, when we talk about these taxes and we talk about planning for it, one of the big things that goes missed is thinking about what about our spouse. So if we have a significant other or spouse and we pass away first, so I made an agreement with my wife. I said, I'm going first. I said, honey, I don't know what I'd do without you. I'm going first. That's just the way it's going to be.
And what was her response to that? Was she okay with that?
She just kind of laughed at me. She said, no. She said, she's going first. So, you know.
Got it. You want to go 1, 2, 3 together, right?
Right.
If it could only be like the movie The Notebook, we would all be happy.
Yep.
But yes.
Thelma and Louise, over the cliff we go.
Right.
So, but you know, so we don't think though about what happens to the spouse when we're gone income-wise and tax-wise? Because income doesn't really change, the need for the amount of income doesn't really change a lot in retirement. What changes a lot is your taxes. They almost double when you're only a single filer.
Wow.
And we've been seeing that a lot lately. There's been a number of people have passed, and we had COVID and terrible things. But now when we plan for those folks in retirement, beyond a spouse passing, we have to look at what kind of money do we use at that point. And if we've done good planning, and we've looked at your taxes early on, and we put money into the Roth that makes sense, then we can use that money to blend in with the other assets to help keep their income the same, but their tax down where it belongs.
Well, and we're keeping it light about who goes first, but the reality is that when you are grieving, that is not the time when you want to be handed a mess and have to navigate this on your own. And as you mentioned, it's not just a hit in income from losing another spouse's source of income, but you're also then getting hit with a higher tax bill. I mean, that just seems like a double whammy that you want to do everything you can to avoid.
It is, and speaking of folks losing a loved one, and there's a lot of trauma there. Very hard. I think, myself, my wife and I have been married almost 23 years, and it's been great at times, for sure. And, we've had our challenges too, but overall great. But I think about, like, what will happen then when I'm not here? How do you go on? Because I know the finances, the number side, but my wife, I would like to think she'd miss me. I'm sure she would, but then she's got to pick up the pieces.
Yeah.
And you don't want to be thinking about, okay, well, I have to do these claims and I have to fill out this paperwork and all this other stuff. And, oh, now what about my taxes? And
Right.
Do I get to file joint this year? Or what happens when I file individual next year? And those are things that we really like to try to help out with. And we really try to develop in the Memories and Milestones roadmap for folks so that they don't have to worry about that in retirement.
Right. Well, and it's never a fun thing to think about, right? I mean, we don't want to think about the end of life until sometimes it's necessary. But, in my own life, I know 4 women who in the last 6 months in their mid-40s have become widows, just unexpectedly like that overnight, each different situations. And you just, again, you have to be prepared because otherwise you end up with a mess on your hands.
Absolutely. And that's where, the Memories and Milestones roadmap can really help out. It's a great way for us to be able to take your situation, get to know about you, and be able to develop a plan, put it in written format. We have a piece that we call the timeline that can help you understand what you need to do today and build that all out so that you have a guideline when a spouse passes, you have a way to move forward. You have a game plan already in place. So folks, if you'd like to give us a call at 833-856-1392, and go ahead and just give us a call and you can ask for your free retirement roadmap. And we have certified financial planners and certified financial analysts that help us put that together for you so you're getting the best advice that we can give you. So again, our number is 1-833-856-1392.
Patrick, thank you so much. And to our viewers at home, again, the number is on the bottom of your screen to call, 833-856-1392. Nothing can beat having a solid plan in place so that you can be prepared for when, heaven forbid, the unexpected happens. And Patrick and his team would love to meet with you and help take care of you. You can also scan the QR code on the bottom of your screen. Just take out your smartphone, open up the camera app. That will take you to a landing page that will allow you to schedule your appointment there. We have so much more to cover when it comes to taxes, right? No shortage of things to talk about. We're going to take a quick commercial break, and we will see you right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Elite Money Market Update. I'm your host, Kristen Oakley, here with CEO of the Elite Retirement Group, Patrick Marcel. Patrick, a great show we're having today talking all about taxes, which I know is such a loaded subject. Right. So I'm so curious, with your firm, how does it work? Do you have CPAs on staff? Do you work with a CPA firm? How does that work for folks who want to come in and really get the best tax planning that they can for retirement?
Actually, it's pronged in a couple different ways.
Okay.
So one of the things we do is sometimes people don't have an accountant. So they're looking for somebody or advice or somebody to be recommended to for their tax planning. And we'll do that. So we do have some great people we work with that we refer out to, and we bring them in the loop. And one of the things we really like about the folks who we refer out to is that they work with us and they help us plan. So I might have some good ideas. We might do the tax what ifs planning software, right? But I still want to have a validation from the accountant because they're very important. And they just know a whole lot more about that stuff than I do, right? On a deeper level, because that's what they do. That's their livelihood. And I want to use their expertise to make sure we're doing the very best planning for folks that we possibly can. So yeah, so there's that. And then sometimes people come and they love their accountants. And that's fantastic. And we say, hey, you know what? Sometimes we want to reach out and bring them in the fold. And I can't tell you how many times that when we've done that, people have actually sat back and the accountants have been like, you know, I love doing this. You know, tax preparing's fine, but the planning aspect, man, this is great. I really, really enjoy this. So it really brings everybody to the table. The accountants really enjoy doing it. They really do. And it puts us really on the same page. That way the accountant knows why are we doing what we're doing for retirement planning for our clients.
Right.
And then we also understand their situation tax-wise better. We can do some additional projections. And there's a lot of times extra insight that the accountants can give us that can actually just make a whole better plan altogether for our clients.
I love that because everyone gets to work in their area, their specialty, their area of expertise, and then really come together to create a plan that's in the best interest for your clients.
Yeah, absolutely. And that's really at the heart of what we do for our clients. You know, being a fiduciary, we want to make sure that we are putting our clients' best interest first. A lot of these accounts that we work with, like the ones we refer out to, I don't get anything if somebody goes there or not. They're there as a resource. And the way I look at it is that, you know, we're kind of the quarterback. So myself, Victor, my brother Michael, and Renee, all of us are really kind of like the quarterback for our clients. And we're just bringing in the specialist, right? We're bringing in those folks that can really bring value, bring expertise in that area so that overall we're really putting a very solid plan together.
They can be calling that play from that bird's eye view, right? That you might not be seeing right on the ground.
Yeah, absolutely, absolutely. And sometimes just a different perspective can mean a world of difference. And unfortunately, I don't see a lot of people that actually take advantage of that. A lot of people that come to us have never had their financial planner really spend time talking to their accountant or work arm in arm with an accountant or CPA to really develop this really well devised tax strategy going forward. But really, we're just taking our talents, their talents, marrying them up, and really producing a great product.
Well, you mentioned a really important word, and that is the word fiduciary. And I know that that's a word that is often commonly used, but for our viewers at home, do you mind just explaining the difference between working with an advisor who is a fiduciary versus one who maybe does not have that designation?
Sure. So when I was earlier in my career, I worked for a large insurance company as a producer, and they were a great company, wonderful company, but I was always guided to sell their stuff. Okay, so when I would meet with my salesperson, we'd go over like, okay, here's the person's file I'm working on. You know, let's brainstorm, come up with some ideas, right? And it always led to their products, though. And I always thought, well, that's odd. You can't tell me that one company has all the best products out there. And what I came to find out is that there's this thing called the suitability standard. And basically, as long as the client is suitable for the product, it was okay. And I didn't really have to go far and wide to make sure I'm bringing the very best tool to the table for my client at that point. My father-in-law, who started the business in 1986, Dave, he actually said, you know, Patrick, I think we need to do something a little bit different. So we branched out. We teamed up with a new company at the time. They were pretty small. And they introduced us to this world of being a fiduciary. And it really fit us very, very well. And what it means is that we, by law, we have to do what is in your best interest. We have to put your best interest first. And for us, that was a really great fit because my brother and I are Eagle Scouts. And being an Eagle Scout, you know, you have the Scout law, the Scout motto, and it's always about putting others before yourself. And I think that's really, really important. And in our office, we talk about the 3 F's. We talk about our family, our faith, and our friends that we help. And a lot of that, if you think about it, your family, your friends, and your faith is putting somebody else ahead of your own, you know, wants and needs. And that, so fiduciary for us really fits well. And it's us putting other people first. Sometimes when people come in, we talk to them and we say, hey, you know what? I'm going to give you the best advice I can give you, but maybe you're just not a good fit for us for whatever reason. But we're not going to not talk to them. We're going to give them the best advice because that's our job, is to give that advice and put their interest first.
Well, I love what you're explaining because being a fiduciary, it's a legal obligation to always serve the client's best interest, but that's your heart. That's what you want to do, right? You want to do what's right for the person who's sitting in front of you. Yeah,
you know, I would trace it way back to when my dad, I remember I was a little kid, and downtown Marathon County Courthouse, there was this little gas station. Dad went to put gas in, and there was a wallet on top of the gas pump. And it had a lot of cash in it. I can tell you this, my mom and dad worked really, really hard, and they did everything they could to provide for us, and they were awesome. Love everything they did for us. My dad and mom could have used that money. But what they did is my dad took the wallet back to Grandma and Grandpa's house. It was Ross Ave, just down the road a little bit. And he went through the wallet, got the driver's license, went through the phone book, called the guy up, told the guy, hey, I found your wallet at the gas station. The guy came over to Grandma and Grandpa's house, picked up the wallet, and he said, you know what? He goes, this was my Social Security check I just cashed. I can't thank you enough for returning it. And Dad's like, you know what? That's what I want somebody to do for me someday, and you know, this is the right thing to do. And the guy's like, let me give you something for it. And my dad said, no. He goes, it's just being a good person. So that stuff like that really sticks with you. And I think that's, you know, kind of really what we molded our company in the form of is that you just do the right things for folks. Right. Oh, that's a beautiful story, and clearly shaped you, and it has served you well in this role as a fiduciary as well. So for our viewers at home, if they're wanting to meet with you, come and meet with their team, you know, maybe some people are already working with a financial advisor, but we know there's a lot of value in getting a second opinion, of getting an independent, objective, third-party view, right? That you know, that other perspective, as we talked about, from a fiduciary such as yourself. What steps does someone need to take to do that? Well, what you can do is pick up the phone, right? Give us a call at 1-833-856-1392. When you give our office a call, I used to be able to say Mom would answer the phone, but Mom retired.
Oh, good for her.
She's enjoying retirement now. But scheduling a time to come in and visit with us, either myself, Victor, Michael, or Renee, and we'll sit down. We want to get to know you and who you are so we can help to build that plan, and we can really do a good job of putting the ideas on paper through our Memories and Milestones roadmap, and being able to deliver something to you that you can take and put to action right away. So again, you can give us a call at 1-833-856-1392, and we'll be more than happy to sit down, get to know you, and talk to you and share with you what we can do for you. Patrick, thank you so much. Again, to our viewers at home, the number to call is on the bottom of your screen, 833-856-1392. We have more to talk about with Patrick when we return.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Welcome back to the Elite Money Market Update. I'm Kristen Oakley here with Patrick Marcel, CEO of Elite Retirement Group. Patrick, we've been talking about so much valuable information today, and one of the things that pertains to taxes, which we've been talking about a lot, is how someone's strategy needs to change when we're working, we're contributing, we're putting money away, but then as we near and enter retirement, instead of accumulating the wealth, now it's time to start the deaccumulation phase.
Yeah.
So walk us through, what are some things that people really need to start paying attention to as it relates to tax planning when it comes to deaccumulation?
Well, actually, there's a whole host of things that can really impact our taxes when it comes to the accumulation of our assets. So we've done a good job planning and preparing, maybe setting some money aside in a Roth IRA, if it makes sense. And then we can blend that maybe together with our IRAs. Again, depending upon when you retire. If you retire prior to 59 and a half, we have to be mindful of that.
For sure.
There's certain ways that we have to take money out prior to 59 and a half. But what we want to really do is we want to be mindful of when we're retiring a couple things. If it's before 65, we don't have Medicare.
Right.
Right. So what we need to do is we need to make sure that we're drawing our money out and we're staying within the limits that we agreed to if we're on the Affordable Care Act. Now, there are people out there that have health insurance from their employer, not very often. It's pretty rare. My Century employees that I work with, they have, a lot of them have it, which is great. Love my Century employees that I work with, and that's great, that's tremendous. But a lot of us don't. So when we retire before 65, we have to figure out how we're gonna bridge that gap. So now it becomes
That
a
gap
game
of healthcare.
of
during the
healthcare
time,
and
right?
taxes,
Right.
really, because we want to think about, not only are we bringing our income in, and probably might be much lower than it was, or we might be trying to stay low on the tax time, taxes and income
Right.
until we hit 65. But we also want to think about what buckets of cash have we accumulated. So now we can start drawing money out of the appropriate buckets and deaccumulate properly. Now, if we have my 3 buckets, I have a bucket that is not IRA money. So it's money like in your pocket. So you reach in your pocket, you have some change in there, cash, whatever. That's your non-IRA. You've already paid tax on it. As it grows, you're going to pay tax on the interest. When you take it out, really outside of, if there's capital gains, there's really not much of a tax burden there. Then you have your pre-tax money, right, which is like 401ks, IRAs, stuff that you have not paid tax on. You've elected to pay taxes at an unknown date down the road.
Right, with an unknown tax bracket potentially, right?
Yep. Then we have our tax-free forever money, I call it. So our Roth IRA money. We have some money maybe in our HSA that we can use for certain things. So now we have to set those buckets in front of us and we say, okay, now where do we draw? We need $50,000 of income a year. Where do I pull it from? Now, keeping in mind, if you're a married couple filing joint, you have a pretty big standard deduction. So well over $20,000, almost $30,000 of the first monies that you take out, right, will be at zero.
Wow.
So that's pretty cool.
You want to take advantage of that.
Absolutely. And then there's another $20,000 that's just simply at the 10% bracket. So that $50,000 could really be, much of it be at a very, very low tax bracket. And really, Victor in our office does a really great job with the Affordable Care Act. And he's really good at helping people figure out the best way to have the right amount of income with having the right health insurance, getting the best subsidy you can get. So we set that up, and that plays into the deaccumulation strategy. And it also can play into taxes, though. Because maybe you need $75,000 or $80,000 of income, and we need to draw some out of a bucket over here that has no implications whatsoever when it comes to the Affordable Care Act. So that gets a little bit tricky, and I think really that's where we shine with what we do for our clients, is that we help take all that I'll say complicatedness.
Yes, there's a lot of complexities.
Yep. And we lay it out, we simplify it. And then, like in our Memories and Milestones roadmap, the timeline that we do for our clients not only tells you what you need to do, but we tell you how we can help you do that. So you're not alone. You're not going to be sitting there by yourself trying to figure out, okay, well, Patrick said I have to do this, this, and this. How do I do that? How does this work? I don't, what's my next, where do I go? That's what we're there to do. We're there to help folks be able to, okay, now we need to do this. You need to get, your legal documents done. Perfect. Get those done. Here's a referral if you don't have a legal person, attorney to work with, right? So we're going to help you walk all through that. And it's a little more complex, but we definitely want to be paying attention to the tax ramifications, where we draw that money from, which one of the 3 buckets, how that impacts our health insurance, how does it impact taxes, and then of course making sure you have enough income, quite frankly.
Right. Oh, gosh, I mean, so many things to pay attention to. And I know a lot of firms out there charge, upwards of $1,000, $2,000 to get a complimentary written plan. And here you're offering that completely free of charge through your Memories and Milestones roadmap. That's amazing. Yeah,
so we feel it's so important to have a plan and have somebody be there to help coach you along that we're going to offer you a free complimentary retirement roadmap. So the Memories and Milestones retirement roadmap, which what we do is we work with our CFAs and our CFPs to develop a plan specifically for you that's tailored just for you. The only thing that you need to do is just pick up the phone and call 1-833-856-1392, and we'll be more than happy to talk to you and have a conversation. We always say we like to get to know who you are first, right? We want to know what your priorities are. That way we can take that information, we go back to the office, we're going to talk with our CFPs and with our CFAs, and we're going to really dive deep and we're going to develop this plan for you so that when you're ready for retirement, you can retire in confidence. And it's a team effort. And that's one thing that we focus on a lot at our office is the team effort.
Absolutely. Well, Patrick, thank you so much. Thank you so much for just your valuable information today. Thank you to our viewers at home for watching. Again, we encourage you, take advantage of this opportunity to meet with Patrick and his team, licensed fiduciaries who are going to serve you and your best interests. Just call the number on the bottom of your screen, 833-856-1392, to get your complimentary Milestones and Memories roadmap for you. Thank you so much for watching, and we look forward to seeing you next week.